Are you a business owner getting crushed in taxes? I've been there too. I've been a business owner for the past 9 years, and in this video, I'm going to share with you the plan that I implemented to reduce my taxes by 20%. Now, I should probably also add that the business I run is a financial consulting company. I'm working hand in hand alongside CPAs for the past 9 years. I've helped hundreds of other business owners do the exact same thing. And the plan that we are implementing is called an executive bonus plan, also known as Section 162. An executive bonus plan, also known as Section 162, is a non-qualified plan used by employers, specifically S Corps, C Corps, and LLCs taxed as S Corps, to provide special compensation to key employees. Now, before you dart away thinking, I'm a business owner, but I don't have any employees, that key executive could also be yourself. So basically how this works is instead of the business paying unnecessary taxes to Uncle Sam or the IRS, they end up transferring that money over to their key executive, or you if you don't have one, and they pay it to them as a salary bonus. And as we know, salary payments are considered a tax deduction for the business. Now, this can also be a very unique way to attract and retain top talent. But the key here is that salary bonus needs to be in proportion and reasonable in size compared to the salary size of that key executive. Now, this bonus can be given as either a single bonus or a double bonus. If they do a single bonus, that just means the business is bonusing that key executive in the year it's given. It is a tax deduction for the business, and it is taxable income coming in for that key executive in that year. If the business decides to give a double bonus, that just means they're giving an additional bonus on top of the original, which is for the exact amount that that key executive will need to pay the taxes on the original bonus. Okay, so how does the money grow inside of an executive bonus plan? Well, think of Section 162 as a wrapper that we're going to place around the outside of the account that the business owner chooses to use for their executive bonus. Now, there are a handful of different accounts that the business owner can choose from, but to be honest, the account that is gaining the most amount of popularity today is called an IUL, or what we also call an Index Universal Life. And that's because all of the money that gets deposited inside of the IUL, or the executive bonus, grows and compounds all tax-free and is accessible by the key executive anytime in the future, at any time, at any age, without paying any penalty. So it gives a lot of flexibility, and there is a lot of ability to make adjustments to it, which makes it extremely popular. Okay, so what is an IUL? It's a permanent life insurance policy that has a death benefit component that never expires, and a cash value component that can grow and earn interest based on the performance of an underlying stock market index that it's tracking. The cash value grows tax deferred and is accessible by the key executive at any time in the future, all tax-free through policy loans. Sound a little too good to be true? Fortunately, it's not, because the key executive would need to get approved because of the fact that this is built on the back of life insurance. So the life insurance company is going to look into their age, their health history, and their criminal background. And that's essentially going to let them know if they can be offering this type of account for that key executive. But that is also the exact reason why an IUL could never take the place of a traditional retirement product like a 401k or a 403b and be offered to the masses. Because traditional retirement accounts need to follow something called ERISA Guidelines, basically meaning that they must be non-discriminatory, meaning everybody can have one. Unfortunately, not everybody can have an IUL because of the fact that there is an approval process to it, which makes them essentially suitable for executive bonus plans because they can be only offered to people such as key executives. Executive bonus plans do not need to follow ERISA guidelines because they're not offered to everybody. The employer actually gets to choose which key executives they would like to offer the bonus to and how much. And there's no rule saying that it has to be the same across the board, which makes them completely customizable and very flexible. And there's also no cap on how much you can contribute per year compared to other traditional retirement accounts, such as SEP IRAs, which can be common to see amongst business owners, where you are capped at a max contribution of 25% of the employee's salary, or a max as of 2025 of $70,000 a year. Okay, so how do you do it? First, the business owner needs to decide which key executives they want to offer this bonus to and what the size of that bonus will be relative to the size of the key executive's salary. Then they have to determine how they're going to get the bonus over to the key executive, and they have a few options. The easiest way is the business gives that bonus through their paycheck. This allows it to be easily tracked as a tax deduction for the business in the year that it is given. That money is taken in as earned income by the key executive who will pay the taxes on it. The money gets deposited into the key executive's bank account, and then they are responsible for getting the money over to the IUL and deposited into it, meaning that the key executive's bank account is listed as the payer on the IUL. The other option is the business can deposit the bonus directly into the key executive's IUL. This means that the business is listed as the payer on the IUL, not the key executive. And this can be done. It just requires a little bit of extra documentation and reporting on the tax side to make sure that bonus is tracked in the year it's given as a salary payment to that key executive, allowing it to be a tax deduction for the business and taxable to the key executive in that year. Then from there, you just need to get the key executive approved for their IUL. And with an executive bonus plan, the executive is listed as the owner and also chooses the beneficiaries on that policy. And then depending on how the business decides to get the bonus over to the executive, will determine who is listed as the payer on the policy. And if that key executive decides to continue to contribute into their IUL year after year, the cash value that is growing inside of that IUL will just grow and compound year after year, accessible, all tax-free. And if that key executive were to ever pass away too soon, all of the cash value inside plus the death benefit to the IUL would come together and transfer to their beneficiaries, all 100% tax-free. Okay, so what companies are actually doing this to receive a tax deduction and to attract and retain top talent? Well, you can just simply go to Google and search for the proxy statement of any company that is public that you'd like to see. Here we're going to take a look at General Electric. And if you turn to the page that has their top 6 key executives listed, you'll see what their compensation is and their extra compensation. And here you will notice that 4 of the 6 are receiving premium payments to deposit into their universal life insurance policies that they own. And 2 of the 4 are receiving over $100,000 a year to deposit into their universal life insurance policies. Pretty cool, huh? Okay, I just shared a lot with you today. If you're a business owner, before you do anything, I recommend you get with your entire financial planning team, including your tax professional and your life insurance specialist, to see if this strategy could work for you. If you want to learn more about IULs, I've linked 2 videos here that will share with you everything you could want to know. Make sure you like this video and you subscribe so you don't miss another video teaching you about how to make the best use of your money and ultimately pay less taxes. Catch you next week on YouTube.